Hey guys, welcome, welcome, welcome. Happy to have you guys here. We got a few things that we're going to share with you all. Well, two things primarily, right, Hank? Just two things.
Well, yeah, because otherwise we'll be in overload. Boy, boy.
So I'm going to put into our chat now, or I'm going to put into the comments so you guys can actually look this up for yourselves as well. And so I have three things that are on the screen. The first thing you guys are looking at right now comes directly from HUD, okay, the U.S. Department of Housing and Urban Development. And
Yes,
hey, can you explain to those who are listening what exactly this is?
this is a letter that's going out to everyone who, particularly for single homeowners, who may be impacted by the threat of or in the process of foreclosure, home foreclosure. Um, because of COVID, a lot of people lost jobs or were unable to make mortgage payments and were being threatened with foreclosures without a due process or things of that sort. So, what the government has been trying to do, um, maybe sometimes slow, maybe not to the agreement of everybody, is trying to protect the millions of people who may be forced to be on the streets because they can't meet their financial obligations in paying of a mortgage. So this is currently the last letter that the federal government has issued to mortgagees and mortgagors to say, hey, these are the new guidelines for individuals who are in foreclosure. You might hear words forbearance, things of that sort. But this is a letter to protect people from being just thrust out on the street.
So one of the things that I think is very interesting about this is I was anticipating that our government or the agencies would go ahead and have the foreclosure process as normal. In other words, if someone's behind, if you're in a judicial state, they would have a filing, and then it might take about 6 to 12 months, maybe 9 months, to actually go from end to end. Basically, someone having that house foreclosed on in auction. But
And
go ahead.
mhm.
Sorry.
No, but Leland, I was going to say that under and that's a good way to think about it because there's been pressure on banks and other folk who lend money to individuals because they feel that they need to be made whole. But if the federal government, if if someone outside of the mortgagee and the mortgagor don't step in, you will have potentially millions of people thrust on the streets of American cities and municipalities in a matter of weeks. So please, I'm sorry, if you can go back to what you're about to say. I get excited sometimes because my the my humanistic aspects seem to override my mental capacity.
Oh no, you're fine. You're fine. Because in our earlier discussion, we mentioned um, economics and ethics, right? Or economics and humanity. So
Hmm.
what we're seeing here is we're seeing an act of humanity where they're willing to uh, extend the time frame an additional 180 days.
Absolutely,
So some
absolutely.
I can understand while some, I guess, investors, if you invest in private mortgages, things like that, you might be thinking, oh, I have to wait, more. I have to wait a few more months before taking possession. If you're a homeowner, however, this is a great opportunity for someone to attempt to get back on track. So ultimately, it could still be a win-win scenario for both sides. If you're someone who's greedy and you don't care about humans, then you're probably thinking, well, hey, I want to take that property. I want to take possession of that property as a lender as soon as possible and put it on the market because there's not a lot of inventory.
But
And get
but but Leland, as I go back to the acts of the federal government to protect individuals, they also created some type of solution for the homeowner.
Hmm.
You know, for the for the um, for the apartment landlord, there were pots of money set aside to make everybody whole. And I think in some instances, states and municipalities may have been trying to play games at the local level, but at the national level, there were people who were still trying to ensure that the swinging of the pendulum was not erratic, that there was a certain amount of just a gentle sway in the pendulum, not stopping it, but just making certain that everybody had a little bit of something as we tried to control COVID and the impacts of COVID.
Absolutely, absolutely. So the reason we're bringing this up is if you're someone that's in that situation, now is a great opportunity to look for additional avenues in which you are able to increase your income. And we'll put a link in the chat for some of those options that you can do to basically earn more money and get caught back up.
Hmm.
The next thing that we're going to discuss is FHA. So this
Ooh.
is this is something that's pretty odd, right? Or so
Ooh.
I'll touch on it real quick. Because we're having a shortage in supply, there's been an increase in prices. All right, we're talking about housing.
Hmm.
Because we have wages that are stagnant and housing prices are increasing, less people can actually afford many properties that are on the market right now.
Whew. Three
So
hundred and $80,000, I think, at the
that,
average.
yes,
No,
the
no,
average.
the media.
Yep. So what FHA is now considering is saying, hey, we're expecting that for 2022, that the floor price is going to be $420,000 for a house,
Hmm. Which is a lot.
which is a lot. And so what they're saying is, hey, if you're looking to buy up to 4 units using your FHA loan, we're willing to finance up to either $2.8 million or 1.8 million. So that's 2.8 million if you're in Hawaii or Alaska, or one of the or Guam or one of the Virgin Islands, and it's
Hmm.
1.8 million if you're anywhere else in the country. So that means that you could take so a 3% down payment on a $1.8 million transaction is going to be $56,000. Okay, so Hank, what's your thoughts on this? On what the FHA, Federal Housing Administration, is doing with increasing the loan amounts or loan limits?
I look at it in two ways. It's giving individuals the opportunity to know, one, um, what they can get financing for, the upper limits of what they can get financing for, and then two, it guarantees the amount that they have to bring to the table for down payment. Because I think traditional mortgages might be 20-25% down payment.
Yep, conventional. Yes, sir.
Okay. So if you were going to get a $400,000 house, 20% of that, okay,
Yep.
just do the math, versus
80,000 guys. 80,000.
3%. Okay. So there are people, Leland, there are people who are, who say, damn the federal government for interfering in XYZ. And then when the federal government doesn't respond fast enough to stuff, they are saying the federal government is asleep at the switch. So it's one of those situations where we want them there when we need them, but short of that, we could care less about the federal government. But I just want people to think, If the federal government had not stepped in since 2020 and provided a certain degree of wholeness for people, getting them not back to zero, because many people were below zero, negative earnings, negative this, negative that, where the stimulus created an avenue for people to be made whole and afford things that they hadn't afforded in ages. And there are those who are against that. Well, to me, many people who are against that are those that are in the one, two, top two, maybe top 5%, who can afford to do almost anything he or she wants to do. And they think that by the government helping the little guy, that is taken away from them. Well, no, it's not. They'll be made whole as well. So again, as you indicated, and as the question is, that it allows people to know what they can afford and what they need to bring to the table. Okay, and that is not as hefty a lift if you're only paying 3%. If you qualify for FHA, um, that's just the government trying to take care of its people, in my opinion.
So, and hear me out. There's always three sides to everything. There's a good, there's a bad, and there's like an indifferent, basically, right? There's
Hmm.
heads, there's tails, and then that little ridge that holds both together. So the positive is that this gives someone the opportunity to keep in a market where prices are basically higher than normal. The
Hmm.
negative of this is, in many cases, with prices being so high, it's still going to be difficult for investors to really be able to investors to really get their foot wet. Hear me out with this. Here's why. I'm going to take this 1.8 million dollars, and we're just going to go to a mortgage calculator online. All right. So mortgage calculator, boom, and
Hmm.
we're going to put this as a loan amount, 1.8 million. All right. And what we see here is if someone has a 4% interest rate fixed, the monthly payment, not including taxes and not including fees, is going to be a little bit under $9,000 a month. Now, this is for a four. Are you laughing? Hank, are you laughing?
No, it took my breath away. I mean,
Yeah, that's a lot, right? So you're talking about $9,000 a month mortgage payment. Again, not including taxes, not including fees, right? Not including insurance. So what then happens is you're like, hey, well, it's a 4 unit. By law, it's FHA. I have to reside in one of the 4 units. I have 3 other units which I can lease out. Okay,
hmm
great. So because the rental market is, in my opinion, just as competitive with the housing market,
hmm hmm
so um, rents have increased. So let's say fourplex, you got three units available. What would happen is you probably would be able to squeeze out. What do you think, Hank? Well, no, let's use the
one and a half.
market. So in the market, you're probably going to pay. You might find people to pay $2,000 a month. Okay,
Hmm.
so if someone pays $2,000 a month, two times three is six. That's 6,000. You're still you as the owner. You still need to make sure that you're able to compensate the leftover $2,000 to $3,000, and that's going to be for taxes and insurance. Okay,
Hmm.
so what we're finding out is that as prices are increasing, it's making it harder. As prices are increasing,
They're coming
it's making
after you.
as prices are increasing, it's making it hard on the affordability. That's what I want to get at. So it's a positive that they're allowing people to qualify for more money, right?
Hmm.
The negative is that because prices are increasing, but income and wages are not, it's making it harder for affordability. And where in 3 years ago, a person would be able to purchase a fourplex, live in one unit of the four, and still have cash flow, it's going to be a little bit difficult to do that traditional route. And so you're going to have to do things maybe like Airbnb, two of the units or so, in hopes to get more than $2,000 or $3,000 a month,
Hmm.
so that you can still keep that $9,000 mortgage payment and not including your taxes and fees and insurance.
I like how I like how you put that, Leland. Um, but and that's for people who are looking at the upper end of that FHA window. But for an individual who just looking for a single family dwelling, and though the market is competitive, I think that they can still find a good, affordable deal because of um, FHA coming to the table to provide an avenue for you to participate in the home ownership arena.
Awesome. One statement for you guys. Whether you are a root of looking to find your next rental property or investment property,
Mm-hmm.
um, invest. Maybe you're looking to go the FHA route, or maybe even do something a little bit. Tomorrow, which will be Wednesday, February 23rd at 7 p.m., we're actually going to walk you guys through how to put together a subject to investment. Okay.
Fantastic, fantastic.
You can build your portfolio using subject to investing, where this will not require you yourself qualify for a loan, nor will it require you to qualify based on your credit score. So it doesn't matter your credit, doesn't matter your debt to income ratio. All that is necessary is for you to find individuals who will be likely to do this type of transaction with you, and
Mm-hmm.
two, that you have the proper knowledge to execute. All right. So again, that's tomorrow, February 23rd at 7 p.m. This right here is a Zoom link. It is free for any and everyone to attend. We're going to walk through transactions, show you guys how to actually put those deals together, and also show you where and how you can find people to help out. Anyway, that will tie in more in regards to the release that was given by the U.S. Department of Housing and Urban Development. Because using the subject to method, be an act or the benefit of being able to reach out to homeowners
Mm-hmm.
who now have an additional 180 days to get some type of deal done with you, in which you can use the subject to method to purchase that property, and the homeowner will be happy that that property is out of their hair, and you'll be better as far as being able to build your real estate and passive income portfolio. So that link is also in the comments, and we'll see you guys there. Thank you guys so much
Oh,
for being
hey,
here.
that's awesome. Hey guys, you owe it to yourselves to just hook onto that link tomorrow night because it's a win-win situation when we look at subject twos, and you'll find out more about that tomorrow. See you on the other side.
See you guys.